Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Strive Asset Management Llc annual report. Strive Asset Management Llc offers a range of services to investment companies. As a large advisory firm, the company provides portfolio management for these clients. This involves conducting in-house research to make informed investment decisions. The firm's expertise lies in investing in exchange-traded funds, ETFs, which are a popular choice among investors due to their flexibility and diversification benefits. By leveraging its knowledge of ETFs, Strive Asset Management helps its clients achieve their financial goals. As an investment advisor to other investment companies, the firm plays a crucial role in guiding these entities towards making informed investment decisions. With its expertise and research-driven approach, Strive Asset Management is well-positioned to provide valuable insights and support to its clients. Overall, Strive Asset Management services are designed to help investment companies navigate the complex world of finance with confidence. By providing expert portfolio management and research-driven investment advice, the firm helps its clients achieve their financial objectives. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of various factors. On the growth side, an increase in sales of product X by 15% and strong demand for product Y led to a 12% increase in sales. The company also expanded into new markets, resulting in a 10% increase in international sales. Additionally, investment advisory fees saw a significant increase of $4,187. On the other hand, revenue decline was driven by several factors. A decrease in sales of product Z by 8% and disruption in supply chain due to the COVID-19 pandemic resulted in a 5% decrease in sales. Increased competition from new entrants in the market also contributed to the decline. Furthermore, investment advisory fees saw a decrease of $1,495 in the asset management segment. The issuance of shares through the at-the-market common equity program brought in significant revenue, while the exchange of shares for Bitcoin resulted in a realized loss. Overall, these factors highlight the key drivers of revenue growth and decline for the company. The financial performance of the company has been marred by significant losses in recent years. Net income has been consistently negative since 2022, with the loss increasing from $21,580 in 2024 to a staggering $393,598 in the period from September 12, 2025 to December 31, 2025. This trend is a cause for concern and suggests that the company's financial health is deteriorating. Profit margins have also been uncertain due to various factors such as legal, commercial, regulatory, and technical uncertainty surrounding Bitcoin. The net loss margin was -9.75% in 2024, indicating a significant decline in profitability. In the period from September 12, 2025 to December 31, 2025, the asset management segment reported a profit margin of -395.6%, while the corporate and other segment reported a profit margin of -95.6%. These alarming figures suggest that the company's ability to generate profits is severely impaired. The reasons behind these dismal financial performance are unclear, but it is evident that the company is facing significant challenges in its operations. The uncertainty surrounding Bitcoin has had a profound impact on the company's profitability, and it remains to be seen whether the company can recover from this downturn. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. As stated on page 40, the company is indeed generating positive operating cash flow, which is a crucial indicator of its financial health. This positive trend is further reinforced by the increase in cash and cash equivalents from $67.5 million to $83.7 million, as reported on page 51. This substantial growth in cash reserves suggests that the company's operations are not only profitable, but also capable of generating sufficient cash to meet its obligations and invest in future growth initiatives. The positive operating cash flow is a testament to the company's efficient management of its resources, effective cost control measures, and strong revenue growth. As a result, the company is well positioned to continue delivering value to its stakeholders while maintaining a healthy financial position. The company's debt level has undergone significant changes over the past year. Initially, total liabilities increased from $4,855 million to $14,289 million, indicating a substantial rise in debt. However, this increase was partly offset by the issuance of Semler convertible notes worth $100 million in January 2025. By December 31, 2025, the company had no long-term debt, with only $10 million of the Semler convertible notes remaining outstanding. In terms of interest expenses, there is limited information available. While interest expenses are not explicitly mentioned on most pages, it can be inferred that they may have been reported in other sections of the financial report. Notably, there are no significant changes in interest expenses mentioned throughout the summaries. Overall, while the company's debt level has fluctuated, its interest expenses remain unclear and unchanged. Strive's management is optimistic about the company's future prospects. The key takeaway from the company's outlook and strategy is its focus on becoming a pioneer in corporate Bitcoin holdings through its Bitcoin treasury strategy. This involves acquiring and holding Bitcoin, which will not only provide a strategic advantage, but also generate investment income that can be used for working capital or general corporate purposes. The company plans to deploy capital to bolster its treasury and strategically invest in digital assets and property and equipment. This move is expected to enhance Strive's liquidity position, allowing it to execute on strategic initiatives and meet working capital needs for at least the next 12 months. Furthermore, the company has increased regular dividends on SATA stock from 12.5% to 12.75% per annum, indicating a commitment to shareholder value. In terms of risk management, Strive is overseeing various activities related to business strategy, capital allocation, organizational structure, and operational risks. The company has also adopted policies such as the compensation recoupment policy and insider trading policy to ensure compliance with Nasdaq listing rules and maintain transparency in its operations. Overall, Strive's outlook and strategy suggest a focus on executing its Bitcoin treasury strategy while managing risks and enhancing shareholder value. The company has made several significant acquisitions and divestitures in recent years. In terms of acquisitions, the company has merged with asset entities, Semler Scientific, and acquired a substantial amount of Bitcoin, including approximately 7627 units at $113,153 per unit, as well as an additional 953 units at an average price of $81,092 per unit. The company also acquired Variable Rate Series, a perpetual stretch preferred stock, SDRC stock, of Strategy Inc., for $50 million in junior tranches of Bitcoin-backed credit structures. Furthermore, the company has targeted companies at a purchase price discount to their book value or cash assets and acquired additional Bitcoin. These acquisitions demonstrate the company's strategic focus on expanding its portfolio and diversifying its investments. On the other hand, the company has made several divestitures, including exchanging approximately $90 million in Semler convertible notes for shares of SATA stock, repurchasing outstanding preferred stock held by an employee, and settling a lawsuit with Semler Scientific. These divestitures reflect the company's efforts to streamline its operations and resolve outstanding issues. Overall, these acquisitions and divestitures highlight the company's dynamic approach to growth and risk management as it seeks to balance expansion with strategic decision-making. The company's financial strategy has been focused on rewarding shareholders and reducing outstanding shares. One key aspect of this approach is the payment of dividends, which have been paid regularly with variable rates per annum. This demonstrates the company's commitment to returning value to its investors. In addition to dividend payments, the company has also engaged in share buybacks. Through the notes exchange, a significant number of shares were repurchased and new ones issued. Furthermore, the company has authorized a large-scale share repurchase program, allowing it to purchase up to $500 million worth of its own Class A common stock. These actions indicate that the company is actively managing its capital structure and shareholder equity. Concerns about inventory buildup and supply chain disruption are emerging in the medical device industry. One key factor contributing to these issues is the decreased usage of certain devices due to changes in the CMS reimbursement landscape. This shift has led to a reduction in demand, resulting in excess inventory that may become obsolete. Another concern is the difficulty in obtaining new 510(k) clearance for existing products. The lengthy and complex process can lead to delays, causing inventory buildup as manufacturers struggle to adapt to changing market conditions. Furthermore, the rapid pace of innovation in medical technology poses a threat to product obsolescence, making it challenging for companies to maintain a stable supply chain. The potential consequences of these issues are significant, with inventory buildup leading to wasted resources and supply chain disruption, resulting in lost revenue and damaged relationships with customers. As the industry continues to evolve, manufacturers must adapt quickly to changing market conditions to avoid these pitfalls. That concludes the financial summary for Strive Asset Management Llc. Feel free to comment below, and I will be happy to answer them when possible.